All right, hello and welcome. Good evening, traders. Hey, it is Thanksgiving Eve. So happy Thanksgiving to everybody out there. I hope you have a great day with your friends and family tomorrow. We're here all thinking of you guys, but what I want to be thankful for tonight is having some new trades and having a nice market to trade in and having great opportunities out there. So let's share a few things tonight. Excuse me, my voice is a little tough. But what I want to share with you is my take on a covered strangle. And what I want to show you is how I'm using all puts to do a covered strangle trade, which is one of the most profitable uh, premium selling strategies that's out there is the covered strangle. But in my version, we're not actually going to use shares of stock. We're simply just going to use puts, an in the money and an out of the money put. I'm also going to give you one other trade this evening, which is a strangle on strategy. So there are a couple of different things today. So let's cover uh, a strangle on strategy, and let's also cover again my version of the covered strangle using all puts. So there's a couple different ways to get into these. I'm going to show you one tonight that's a little bit different. So I hope this gives you something to think about as you go out there. But what I want to do first is let's get into the market on the day really briefly. ES was up 47 bucks, no big deal, 0.7%. Volume was actually okay on the session considering it was the day before a holiday, but on the last couple days going up, volume has continued to drop, but we are in a holiday week. So I think that's something that we've got to at least be a little cognizant of is that volume wasn't going to be great this week. Oil's up, gold's up, bonds were down slightly, which is going to give us a great bond trade entry. So let's jump into that and see what we can get done today. And let's look at the portfolio as well. And then we'll get into these trades. So bear with me. I have not had a chance to update my portfolio on the day today. So let's just do this really quickly. Um, I normally like to share these anyway. So today's the 26th. On the session today, where did we close? And the market just closed about 45 minutes ago, 406. So nicely delta neutral, perfectly where we want to be, 1249. So our theta has dropped a bit, but we actually closed out multiple winners today. 120-day naked put on ES, and we rolled some trades. So a lot of stuff was done today. You can see too that our net lick 388, 343. So a nice another up day for the week, and then 188, 918. So our buying power continues to drop a bit as we start to close out some winners. Now, I did book 5,700 in realized losses today, but also you can see that our net lick went up substantially this week despite booking some losses for the week. Why is that? Well, because we're rolling in the money covered calls, right? As part of our income poor man covered call strategy, which is rocking and rolling out there. Pretty happy with that. In fact, let's share just a little bit of that. I don't want to take too much time because I want to get into the covered strangle tonight. But let's look at our income poor man covered calls. And we did some rolls today. So let's just update how we are doing. First, we'll take a look at SPY. We ended the day at 93,680. So 93,680. We're now up, we're up 63%. We've kind of been in that range for a little bit of time in 296 days. Still doing fantastic. Fantastic. We've made about $30,000 on that trade. On the Qs, this ended the day at 27,836. 27,836. These are up 70% in 224 days. Strategy, here's the interesting one. Strategy, we're going to close the day on strategy at, we actually have a negative here, minus $5,043 on the trade. So you can see here that the strategy has actually dropped 41%, but we have generated 7% in 68 days. Okay. On a stock that's dropped 40%, I'm loving it. I think this is great. And I like strategy here at the lows. In fact, there's a reason that we're going to do that strangle today as well. Let's finish up here with gold. Let's see, we did roll these today, and then 34,388, 34,388. Okay, that's going to put us up 151% over $11,000 on gold. And then we're also in AVGO, Broadcom as well. We did roll, and then this one is the current value is 18,294. Okay, 18,294. This thing is up 66% now in a month. 66% in a month. Fantastic stuff on this trade. So overall, when you look at where we are, we've put in $118,000 into these trades. Currently, everything is worth 169, so we've had a nice $50,000 worth of appreciation, which is why you try to trade stocks, underlying assets, whatever that are in an uptrend, strategy notwithstanding. We've generated 11 grand in covered call premium off of that for a total of 62 grand. So we're up 52%. We've made 62 grand so far on $120,000 roughly worth of investment. That's pretty good. If you look at just the income that we've generated, it's almost 10% on this as well. So we've had a nice year so far. We haven't even been doing these a full year. Some of these have only been on for a month or two. Anyway, there you go. There's the income poor man covered call strategy. Let's get into the meat of today's session, and that's really talking about the covered strangle. All right, so covered strangle. So normally, most of you out there are, owning a stock, whether you wheeled into it, bought into it, whatever, but you had to buy the stock. You're buying 100 shares. We'll just stick with 100 shares of a stock. And what happens when you do that is you're going to be using up the cash in your account. Okay, so there's obviously margin being used, okay, or buying power being used, but you're also using up the cash, which means you can't use that for anything else out there. So capital efficiency, maybe not the greatest because you're chewing up your cash. With selling, the strangle, you're generating income. So you've bought the stock, you've paid the cash for it, you own it, which is great. It's yours to hug and hold and do whatever you like with it. You've got it, and hopefully you like that stock. Now, instead of writing covered calls, what I like doing in many cases is writing covered strangles. Now, you don't want something that's in, a rocketing uptrend. Okay? So I don't want, to do this on Palantir or Hood or something like that that's going crazy. It doesn't make as much sense to do it. However, if you were going to do a poor man's covered call, why not do a poor man's covered strangle? That's a whole nother strategy for another day, but you double the amount of money. Not only are you making money from the covered call, but you're making money from the naked puts or the cash secured puts if you want. And if it drops, you could technically buy some more shares at a bigger discount, reduce your cost basis, and do it again if you like. Or you can roll those puts out. I don't want to get too deep into those types of strategies, but I'm just giving you a sense of what you can do. In portfolio margin accounts, in the money puts are going to use less margin than owning the shares plus the covered call, right? So you're going to use a little less margin in a portfolio margin account, especially if IV is high and the stock might be strong and so forth. But we can then run this synthetic covered call, as I'm calling it. Instead of owning the stock, I just own two options, and that's it. I own an in-the-money call or in-the-money put, and I own an out-of-the-money put at the same price that I would be selling the covered call, right? And I like this because it's still going to give me nice positive delta leverage. It's going to be a lot more efficient from a capital standpoint. So, and if IV is a little elevated, it's going to give us a little bit more juice, a little bit more extrinsic, a little bit more something something when we put this trade on. So the purpose of the trade is, I'm going to replicate long stock and covered call without using any shares. I can generate consistent premium every 30 days with this strategy. I can still maintain a directionally bullish income generating position, which I think is fantastic. I'm going to avoid capital inefficiency by owning stocks. I don't have to own stocks in this. I'm going to collect extra income by selling that out of the money put versus just the covered call. So I'm going to make more than people that wheel or sell covered calls, which is a great strategy anyway, but this gives you a little bit more. And I can often benefit from really great put skew as well. And I improve my downside break even by getting into double premium. I'm reducing my cash basis, even though I don't have stock, a little bit more, which is giving me a better downside break even instead of reducing that basis. All right, so here's how we do it. The first part we're going to, and we're going to go into an example on this. My first leg is going to be an in the money put. Typically, I'm doing this in the money put at about the same level I would sell a covered call, which normally a covered call is around 30 delta. In fact, let's go to the account here and see if we can walk through a little bit of this with you. And I've got one on TLT here, so we can share along, and hopefully this makes a little bit more sense for you guys as well. All right, so I will use my account. So here's the account on the day. Again, pretty nice green day. Uh, Pretty much everything that we own is up on the session. And here's the TLT. We opened this yesterday. Here's the covered strangle, but let's actually go to put a new one on. So if I was going to do a new one in TLT, I'm going to go out to about 30 days. And out at 30 days, what I would do, in fact, let me make sure on this thing. So let's put on a new trade. What I'm going to do is instead of selling maybe this 29 or roughly 30 delta out there, I'm going to actually do the in the money put at the same delta. So this one happens to be right around 65. I think 70 is a good range. So I think 70, 85 delta, something around those, depending on the stock. I'm going out about 30 days on this, and this is going to create essentially a synthetic long position. Okay, don't believe me? Let's take a quick look. If we were to buy the shares, okay, so I'm going to buy 100 shares of this at $90.58, and let's just use this 92.5. And if I would sell the covered call here, let's take a look at what this thing looks like on the chart and make sure we got nothing else in the way. But here's what the graph of that's going to look like, right? So our upside is capped at 228 bucks, okay, which is again, we own the shares, but we capped it by selling the covered call. Right? We're going to get about $34 of extrinsic. We're going to use around $600 in buying power in a portfolio margin account. Not too shabby, okay? Not too bad at all. Okay? But if we also did the exact same trade using only the in the money put here on this trade, here's the graph again. $260 to the upside, pretty much the exact same. It's got a little bit better buying power efficiency, so I'm going to use a little less buying power. I'm not going to use any cash out of my cash reserves. So if I want to use bill or T-bills or something like that to generate some additional money, I have all of that cash available to do that. I could actually use 90% of my account, 99% of my account for T-bills if I don't spend the cash on other trades. Okay, so I'm only using the margin that they give me when I'm selling puts. But the exact same looking, the max loss is exactly the same. Somebody last night was worrying, oh, what you're going to get blown up if volatility increases. Like if you own the stock and we're selling covered calls and volatility explodes, and the market sinks down, okay, and crashes, well, you're going to lose the same amount if the stock crashes, if you as you own the in the money. Okay, and I would still get assigned potentially at this cost, okay, minus what I took in. Okay, so my cost basis on this thing technically is going to be right around 90, which is right where the stock is today. So there's no difference in owning the stock and selling a covered call versus selling the in the money put. All right. I like high extrinsic, low intrinsic if I can. I would ideally like to enter this on a slight pullback uh, to support, but I don't really subscribe to market timing very much on things. And then I would also, so I would open that, but then that's only part of it. That's the covered call, and and long stock, then I would also go down, and we're just using this 87 because I already used it once. Okay, I'm going to sell somewhere between a 10 and 30 delta. I like the lower, like 10 delta. That's fine. I don't because I'm getting double the income. Okay, on the covered call side or the synthetic covered call side, I'm already getting income there. So I don't need to generate quite as much here. It's just really adding on and increasing that. So look at some support levels, 30 DTE, same expirations. This gives me additional income, reduces my cost basis, gives me a wider break even on the trade. And overall, this is a nice 82 delta trade overall. So this whole thing is 82 delta. So I'm very positive delta. Okay. So if the market goes up, this is what things look like. Okay. Looks great. Okay, so we still have an even bigger upside now, and we have no risk to the upside if things go up. Now, if things go south and go down, well, now we have risks of assignment, but you have this in any naked put or put cash secured put scenario. Okay, would you do this on something that was bearish? I would not. All right, so can things go down? Absolutely, and we got to have a plan for that as well. All right, so the combined position now, again, is about 80 some odd delta. If you did this using the stock, okay, and then we sold the covered call and the naked put, okay, it's a little bit higher delta because of the call, but a little bit higher delta is about all we're seeing on this. Still not a bad setup, still pretty good, and you're in pretty good shape. All right. So, what do we want from a market? Well, we like a moderately bullish trend. Again, I don't want something that's going straight up in the air right now. I'd love to see something with a little higher IV rank, but again, I don't subscribe to trading based on IVR. Okay. Is it a bonus if you get it? Yes. Do I wait until I get it? No. Okay. If I see the trade I like, I'm going to place it on. But if IV rank is a little bit higher, I think that's great. Okay. Ideally, I would love to have the price above the 20 and the 50 EMAs. And in this case, on TLT, we are above the 20. We are above the 50. Also, I like the 8 greater than the 21, which is also what we just got today as well. RSI between 40 and 65. We don't want this thing overbought. Well, right now it's at 58 and rising. I think this is a perfect condition. Um, and we don't want a multi-day, breakdown in the stock. And then what we're going to avoid is low IV. Again, I don't subscribe to this so much, or a stock break, that's breaking below the 50, or something downtrending heavily. So we'll stay out of those danger areas. I want something that's uptrending to neutral, neutral to slightly uptrending. And TLT fits the bill perfectly. There's a couple other stocks that fit the bill that we could do this on. Right? I'm going to risk up to 2% of my account on these if I lose. And how do I then place this trade? Well, or how do I manage it once it's on? I'm looking for a 50% profit target. Okay, I usually get that in 10 to 18 days. If we are in a strong uptrend and this is cranking, I might let it go a little bit longer. 65, 70% max profit would be great. What we don't want to do is hold to expiration because my synthetic stock or my in the money put, okay, is going to get a little wonkier. And what we want to do is make sure that we, don't have any risk of assignment near expiration, okay, by being either in the money on these things if need be. All right, stop losses. Uh, if I'm below the out of the money put for a couple days, and not just tag it, but maybe below it for a day or two, then I may look to get out or roll. Okay, if it breaks a major support that I identified, I might close the entire trade as well. Typically, I will also close if I hit a 2x loss on the entire trade. And then again, catastrophic exit trigger. If both puts go in the money, and then the delta gets over 90 on the in the money put there, then I might close it or convert it to a true wheel by taking assignment. The nice thing here is I don't have to worry about assignment because you would own something that you like anyway. Uh, out there. So assignment's not really a bad thing, okay? Because if you get assigned, okay, what would you do? Well, then I would sell another a true covered strangle around that stock with a call and a put above and below that price. So I would go right back into another covered strangle if I was assigned on either one of these. If we stay sideways and we stay in between these two, uh, that's the perfect scenario. Okay, we'll look for that profit at 50%. Typically happens quicker. And then if price does move down a bit towards this out of the money put, okay. All right. Well, if we're getting close to this, I may roll out uh, this one out and down. I potentially could do that, right? Which could widen my break even. I could take in some more credit. I'd leave the in the money put. Uh, as it is. It's already acting as long stock in this position. Okay, I'm not rolling this in the money down at all. Now, if we move sharply down and both puts go in the money, then I will look to bail on that thing overall. So there you go, is essentially how I put this trade on. I hope this was helpful for you. Let's look at another scenario and maybe another stock. Oops, that we can get into. And what is something that's in a, I think SoFi is a good opportunity potentially. I haven't looked to see. Now, if we're looking at the chart on SoFi right now, we are kind of a neutral to bullish trend. I mean, it's been sideways to slightly up right now. Uh, we are above the 8 or above the 21 and the 50 EMAs. The 8's not above the 21, but it's still bullish and above both of those. MACD, RSI rising, RSI at 51. It's a good setup. So I might go on SoFi out to 30 days. I would look at something again, potentially around that 70-ish delta for in the money. And then I would go potentially somewhere around that 10 to 12 delta somewhere on the bottom. Now, again, where you put the put down here would be, do you want to potentially get assigned and wheel or write more covered strangles on these? Well, support right now happens to be, I think, around 2350. So I don't think this is a bad spot to be. If you want to go a little bit more chicken down here, you can. But let's take a look at how this thing is playing out on SoFi. Let's make sure we got everything set up correctly here on SoFi. Here is the position on SoFi. Here's the nice thing. Okay. You've got a $431 uh, capped gain to the upside. So if we move up at all, we're going to hit a winner here. And there is uh, no limit on the upside to how high we go because there's no loss. So it doesn't really matter. We'll make 431 no matter how high it goes. Our buying power is pretty small on this as well. So we're not using a lot of buying power, especially in a portfolio margin account. Extremely good trade here on SoFi. So there's a couple here that I really like that we can do. So I like both of those trades. I'll give you one more trade for the day. So I hope you like the covered strangle opportunity. It's just something else to get the mind rolling and start to think a little bit that, hey, there's more than one way to trade out there and really enhance your income. But I want to take a quick look at strategy and tell you why I did what I did today on strategy, and I'll wrap up and we'll get going. So here on strategy, you can see we've been in this downtrending channel for a while. We keep bouncing off the bottom to the top, the bottom or the midline to the top, the bottom, and now maybe heading to the top. I feel like we're starting to put in a decent consolidation here. RSI is starting to creep back up from oversold. MACD is already reversing. We're very close to a bullish PSAR and the 8 moving average trigger. So what I did here on uh, on strategy today was I added a strangle and I actually put on the 130 260 strangle. So the 130 260 strangle, and I only went out 20 days on this one. It generated for me, let's take a quick look. We generated $3.21. So 321 bucks on the margin that we used here. So pretty inexpensive trade, not using a ton of margin on this. In fact, I can pull it up. I think it was around $2,000 maybe in total margin that we got into. So it's a higher risk trade. Again, do your own research. I'm just doing this for education and entertainment purposes only. I'm sharing my trades with you. I strongly recommend that you create your own trade plan, do your own research, consult anybody you want to, your sensei, your guru, or whatever whatever you choose to do. Okay. But I want you thinking, I want you to get outside the box. Last thing I'm going to say is if you like this video, click the thumbs up. But we are running a Black Friday deal in the Discord. Fantastic deal for you. I'm going to put the link down below. You can click on that. You can get a pretty significant discount. Instead of the usual $150 a month, you can get in there for almost, I think it's $89.40 for the first month. We're going to give you a bunch of winners, okay? Hopefully, okay? That should hopefully pay for your subscription for a while. Come in and get the education. Come in and steal the spreadsheets. I don't care. You want the covered call spreadsheet for ETFs. You want the poor man's covered call spreadsheets. You want the trade tracker. It's all there for you. That alone is probably worth 89 bucks. So if you want to join, click into the description down below. Go to incomenavigator.com. Incomenavigator.com. Join up. There's a coupon code in there and a link that you can use down below. And I hope to see you soon in the Discord. We had a bunch of people join up today. We're excited to have a bunch of new members and share what we're doing and see how we can improve the community there. All right, we'll see you. Everybody take care. Have a great rest of your day. Bye-bye. Happy Thanksgiving.